Elon Musk reveals that U.S. economy is collapsing. Elon exposed U.S. government for their recent moves, and as Musk reveals, the country is getting worse every day, and a lot of things are happening that people are not aware of. But more importantly, according to Musk, soon a lot of bad things will happen because of this collapsing economy, and people should know what is really going on in the USA. This is a crazy story development, so let's explain how Elon Musk reveals that U.S. economy is collapsing. So, the United States is the third most populous country in the world, with a population of over 339 million people. This is dwarfed by the populations of China and India, which have over 1.4 billion and 1.3 billion people, respectively. However, the U.S. population is still significantly larger than that of most other countries in the world. As of 2022, the total GDP of the USA was approximately $25 trillion. To compare, the biggest economic competitor to the U.S., China, boasts a GDP of roughly $17.7 trillion. While still significant, it remains lower than the U.S. by a hefty margin. The third largest GDP belongs to Japan, clocking in at around $4.9 trillion. It pales in comparison to the US and China, highlighting the significant gap between the top two and the rest. Also, last year over 5 million new businesses were registered in the USA, meaning averaging almost 14,000 new companies were created every day. So with this impressive number, how is this possible that US economy is collapsing? Well, Elon Musk has been quite vocal about his concerns regarding the collapsing US economy and the potential for an upcoming horrible economic crisis. Musk believes a crisis is very highly likely and has stated this on multiple occasions. He fears the Federal Reserve's interest rate hikes, intended to combat inflation, are instead pushing the economy towards a severe downturn. He criticized the Federal Reserve for using outdated data to make economic decisions, arguing that their actions are based on a lagging picture of reality and could exacerbate the crisis. Musk pointed to recent events like the collapse of Silicon Valley Bank and the takeover of Credit Suisse as alarming signs of financial instability. So according to Musk, U.S. economy is performing horrible recently, and there are a few different problems that is causing U.S. economy to collapse. And the most important problem is, of course, high inflation. Inflation has become a major concern for the U.S. economy, impacting everything from grocery bills to gas prices and beyond. An additional problem for the government is that the war in Ukraine and ongoing geopolitical tensions have caused significant disruptions in the global energy market. Crude oil prices skyrocketed, leading to higher gasoline and heating costs, which ripple through the economy, impacting transportation, manufacturing, and other sectors. Also, while wages have increased in some sectors, they haven't kept pace with inflation for many workers. This means that people have less purchasing power, limiting their ability to spend and potentially contributing to lower demand in some sectors. And rising prices eat away at people's real income, making it harder to afford basic necessities and reducing their quality of life. Also, the American housing market is facing a complex and multifaceted problem, characterized by a confluence of factors. Housing prices have skyrocketed in recent years, far outpacing wage growth. This has made homeownership unattainable for many, particularly first-time buyers and low to middle-income earners. The median sales price of existing homes in the U.S. hit $420,000 in October 2023, a staggering 19.1% increase from a year ago. Also, the U.S. is facing a chronic shortage of housing units, particularly affordable ones. This is due to a variety of factors, including restrictive zoning regulations and rising construction costs. The supply deficit has driven up competition and further inflated prices. Also, the Federal Reserve's recent interest rate hikes have made mortgages more expensive, adding another layer of challenge for potential buyers. Higher rates mean larger monthly payments and further erode affordability. Younger generations are facing a particularly tough time in the housing market. They are saddled with student debt, rising living costs, and stagnant wages, making it even more difficult to save for a down payment and qualify for a mortgage. The consequences of these problems are far-reaching. The lack of affordable housing can lead to homelessness, displacement, and economic instability. So, this is an issue that needs to be fixed very fast. Moreover, the U.S. national debt, currently surpassing $33 trillion, casts a long and worrisome shadow over the American economy. It represents a mountain of borrowed money accumulated over decades, and its unchecked growth raises concerns about the nation's future fiscal sustainability. One immediate worry is the rising interest payments. As the debt balloons, so does the annual cost of servicing it. In 2023, interest payments consumed a staggering $726 billion, roughly 14% of the total federal budget. This figure is projected to keep growing, potentially diverting crucial resources from essential programs like healthcare and education. Beyond the immediate budgetary strain, the long-term implications are even more troubling. A soaring debt can hamper economic growth by deterring investments and potentially leading to higher taxes or reduced social programs. It can also weaken the nation's international standing, undermining confidence in its financial stability and potentially impacting borrowing costs. And the U.S. is taking a multi-pronged approach to try and avoid a recession and to fix this situation. But it is no guaranteed way to avoid a recession, and the effectiveness of this response from the government will depend on a variety of factors, including the ongoing war in Ukraine, global economic conditions, and how the Federal Reserve manages interest rates. And that's it for today. Subscribe to our channel and hit the notification bell.